Ajay Srivastava, Chief Executive Officer of Dimensional Consulting. Ajay, good morning and thank you for joining us. Ajay, we are less than 2 weeks away from the election verdict and honestly, nothing else really matters for a market watcher. So how are you approaching the event? Are you approaching the event confidently or with a nervous frame of mind?
No, I think we are a little more confident than we should be because three things. One, positions are fairly light at this point of time. I think we are positioned in stocks that could, may react, may not react so much, but could remain a safer bet in the longer term. That is two. Number three is we are still positioned on the side, whether negatively or positively, where the economy is moving. Irrespective of the result, Nikunj, the fact remains that we will have a fiscal deficit more than 5%. We will have 2 or 3 cumulative oil price increases coming in next 1 or 2 months after the new government comes in. We got a whole host of issues which are still to be addressed, and maybe the monsoon doesn't turn around. You might have a support prices plus MSP going up. So our bet is inflation will go up. The mainline stocks in a select industries are going to outperform the market, irrespective of who comes in. Maybe on the pop-up day or whatever the election day, you might see a pop-up which gives you good opportunity to go long or short. But the trick is right now, I think, is to be safely positioned in the places where you want to be rather than positioned in the places where you think a majority government will take the stocks.
Ajay, GE has made an open offer to buy shares into Alstom T&D. Crompton is talking to Hitachi and promoters are looking at exiting the company at a substantial premium to the existing market price. Are these telltale signs that one should not ignore the entire machinery of the engineering space?
No, not at all. I think this says nothing, Nikunj, in our view, because GE's open offer is purely a function of a statutory law in India that a parent company gets taken over. You've got to make an open offer compulsorily. So whether they like it or don't like it, they have to make the open offer. They may love to come back to India, let's be honest, but that's all about it. And I don't think GE's track record globally for the last 10 years or in India for that matter, whatever they're doing here gives you any comfort that anything great is going to happen to the stock. And I would believe that it's only a statutory offer. They will take out the average of the prices, which will be lower than 271, which is prevailing in the market. And I don't think that the stock is going to, explode into some 500, 600 rupees stock just because GE has bought over it. I don't think that's going to happen. It's a pure statutory offer. Crompton, it's a very unique case. It's a very strong company which was run into the ground completely and now is up for sale. It's not a story that someone is actively bidding for the stock. It's not the story that there are 100 bidders for it. It's purely a situation where the promoters could not run it, cannot manage the stock, the shares, and of course the company had done all kind of stuff, acquisition, overseas acquisition, which has bled deeply into it, and so on. So therefore, it's like a fire sale happening in Crompton Greaves. It's not an active acquisition of a robust candidate of a robust economic situation. It's a candidate. There's a ready-made company available, free, literally at a very cheap discount to its book value, and therefore you want to may or may not buy it. And we are told there are not some multiple bidders for that share and this company. So it tells you that let's understand this carefully. Engineering turnaround will be the last thing which happens in the economy, Nikunj. We are facing a situation of a customer purchasing compression of a serious kind, which is going to accentuate in the next 6 months. So ultimately, somebody has to buy the products in the end, consumer products. And that is where the problem lies. People are not buying. There's no purchasing power in the system to buy. So all this turnaround story can't by government fiat happen that we will turn it around. It won't happen. People have to start buying, and that's not going to happen in the next 6 months or so.
Ajay, assuming that on 16th of May, we are in for a big swing, and depending on the verdict, it could be a swing of 5% on the upside, a cut of 5% on the downside. How are you laying your bets?
See, okay, let me put it this way. What we have said to ourselves is that the swing can be plus or minus, you're rightly saying is. So what we are positioning is in terms of Bank Nifty and the PSU stocks, we are at this point of time running a short position. If there is a swing up, we'll double the shorts. That's a very clear strategy because the March results are subpar even after all the window dressing, and the real chickens will come to roost in the June quarter. 1. 2, we are betting on the fact that inflation will go up and not go down, even no matter which government comes into power. So on the banking PSU stocks, by and large, we are negative at this point of time, and we will double the bets. We are positive on a few large cap stock at this point of time, in which case, if that pops up, we're going to maybe sell out at that point of time or keep our holding intact. Mid-cap, by and large, we've emptied the space completely in the last 2-3 weeks. We almost got nothing left on the plate at this point of time. But we will ride the wave. You know, we're not going to buy into a day if it's 5% plus. If it is 5% down, I think it's a good case to be short in the market or go short rather than just try to nibble at and say there is value buying opportunity.
Ajay, what's the sense that you're getting about metals? Because they've been having a rough patch of late with further weakness in the Chinese PMI data. Does it seem like this weakness is here to stay for metals?
See, I think if you divide the two groups, the ferrous and the non-ferrous, very clearly, unfortunately, the non-ferrous part of it is dominated by the Sterlite group, where we always know that the issues with the management have been historical, nothing new. You've seen what's happened in Kane Energy. So you tend to believe that there are not many candidates at this point of time in the non-ferrous segment of a significant kind. Now come to ferrous side. I think the ferrous side between SAIL and Tisco, Tata Steel that you want to choose to, I think the same thing. The run-up has been huge in Tata Steel on expectation of recovery. That's one. Number two is that with the issues with the iron ore mining coming up again and again, and we saw the ban and this 20 million ton cap in Goa. We've seen the Orissa would come up in Supreme Court this week. I think the raw material itself is becoming an issue for the industries, and the import, the cost goes up dramatically. So even if demand turns around, which it may happen maybe, and it will not happen in the monsoon till the monsoon, it will happen in October to December period, the cost is also going up in the same measure for these companies. So a profit turnaround looks to be very much more difficult than a volume turnaround for these companies. So that is why we said to keep away from the metal stocks at this point of time, because the recovery will start first from the consumers and discretionaries before it goes on to the metals and the end of the story. Okay. You may guess it again, you may buy forward for it, but that buying forward is for a horizon October to December. So you would tend to go short if there is a market which is a spike happens in the shares rather than go long in a spike.
Ajay, another disturbing data has been the kind of volume growth volume growth numbers we've got from top FMCG names, HUL, Colgate, Marico, or for that matter, Godrej Consumer. Even though we can extensively talk about the great rural opportunity, volume dispatch numbers are clearly indicating that Indian consumer is slowing down.
You're right, Nikunj, and that's what I said, that listen, who is going to buy the end product? I think that is where the critical point is coming up at the end of the day. The recovery is, any recovery, economic recovery, is consequent of somebody buying a product in the market or a service in the market. You already seen the real estate sector. You're rightly alluding to the consumer. We are still saying the rural story might be a little better than the urban story, purely because whichever new government going to come in has got to fulfill a lot of promises. MSP at cost of capital plus returns of 50%. That's a hell of a lot of promise to fulfill by the BJP if they come to power. If that happens, the food grain prices could be up by 30-40%. That's a serious number coming out. So, we are assuming the fact that a lot of money flow will go back to the rural India, and therefore rural sector will start afresh. But at this point of time, and you very correctly analyzed, the volumes are falling because people are simply buying less. A 10% plus inflation is telling people that every time you go to the market, with salary being at 4 to 6% increase, if at all, you have to buy 10% less quantity. It's not it's not magic to know that people have to compromise on quantity or go down the value chain to unorganized sector to meet their budgets. So, but having said that, I think there will be companies like Dabur which will continue to outperform the segment, among even the rural segment. So if you're a portfolio holder position like we have, we continue to hold Dabur, and I think it's a very good long-term bet compared to all other bets. And that will perform maybe, if others perform at 6%, he will do a 10%. But among the ladder, Dabur would come out to be the tops in the case. So you can be selective in consumer. Not all are doing badly. Some are doing worse than the others. But you still have to go and pick some stocks.
Market insiders are telling me that you're buying into Jubilant Foodworks. Are my sources correct?
Yes, we are.
So my question is why? It's still trading at a P multiple of 30 times plus for a company which is not growing. The Dunkin' Donut franchise has not gone anywhere, and same store sales are also not very inspiring.
See, every company's, there comes a time in every company's life when there is an inflection point. Inflection point was negative for a long time. It gets sliding down. We believe that the Dunkin' Donut franchise will revive itself. The pizza franchise is not slowing down. One would not say it's slowing down so rapidly, but yes, it's slowed down, but so has the valuation of the company. And number three is that we have now found that if you look at the competitors, they have into a price war at this point of time. You've seen everybody announcing a price war, whether it's McDonald's, whether it is Pizza Hut, everybody. We don't believe it's sustainable at all. So come the price war ends maybe 3 months, 6 months down the line, this company could be well positioned to take back the leadership. On distribution, let's be honest, it has a pure, simple leadership in this country. No other fast food chain has been able to even come close to it. And therefore, one would believe that if any turnaround happens, the price war stops, this will be the first gainer in the market. Now, a call may be wrong, but we believe at the pricing that has now come to, and maybe if it goes down another 10-15%, becomes a better opportunity for us, it could represent one of the first leading candidates to buy into a so-called India revival story if it happens.
Quiet with a positive bias, that's how Jubilant is trading right now in trade. I just want to see what Infi as well is up to, considering you read it first in the Economic Times this morning that Infi may be looking at acquisitions to the tune of about $300 to $400 million in the Nordic countries, and that the next buyout could very well be similar to their Lodestone buyout. So watch out for Infi, though the stock is lying absolutely flat in trade. Ajay, you've always talked about your preference towards TCS over Infi, and that you're not a buyer in Infi at all. Why is that?
Two reasons. First, my preference was not TCS. Let me correct you. My preference has been Tech Mahindra always, and still continues to be, including it's my holding for disclosure purposes. And it's given me a good return, and I think it will be the most wonderful stock in IT space for at least a couple of years to come. For various reasons, we can debate that. See, Infosys, any company, why do I buy Tech Mahindra? Why do I recommend Mahindra as a must in the stock? Starts from promoter and management. Infosys is not run in a professional manner. Hard words, but that's what it is. You know, it reminds me of all, I don't know if you people seeing Felicious perhaps, but Facetious the Batman saying that you can die a hero and live long enough to be a villain. That's what is happening in the company today. I think the company needs a fresh blood on the board. The company needs to be independent board. It's a cahoot of people running the company, and that is what doesn't give you comfort in a company. The old gentleman who's come in, most respected person, needs to go back to whatever he can do philanthropically, learn from Bill Gates, for instance, and let this company come evolve itself. It's got just too much of emotional baggage to outperform people like Tech Mahindra in the market. That's why we say the point is, if you want money, you put in Tech Mahindra, strong promoters, strong management, open systems, clear-cut paths to glory, compared to Infosys, which surprises you. You know, look at the results, what they came out with. What was promised to us, share went to 2,800, and what happened at 2,800? The guy came and said, the reality is, we're doing badly, guys, and we're going to keep doing badly. So we're 2,100 now. So, you know, why would you put the money with such a management? Tell me, you tell me, give me two reasons why you should money with Infosys rather than Tech Mahindra.
Reason, the stock is cheap. Ajay, I don't know about two reasons, but I can give you one factor. The Infosys stock is cheap. Okay. Maybe all the bad news is in the price.
You know, that's why I said, why does the stock go cheap? The reason somebody has to cut the, doesn't want to buy the stock is because the reason it's so cheap. You don't buy everything which is cheap just because, and it's bad quality at the end of the day. That's why it is cheap. It's a bad quality stock, and that's why it goes cheap. A good quality stocks comes expensive. As simple as that, Nikunj.
You know, Ajay, some would argue that the rate of change for Infosys could be constructive. I mean, whatever could go wrong has gone wrong for them. Utilization rates at a rock bottom, attrition rate at an all-time high. So if anything incrementally changes, maybe for a franchise like Infosys, which is trading at a P multiple of 12, 13 times, the gains could be substantial. Maybe it's about taking a leap of faith, but with good companies, you have to take a leap of faith like you're taking one with Jubilant Foodworks.
See, okay, you're right, absolutely. But as an investor, as an employee, I don't know how much choice you have. As an investor, I have a choice to take a leap of faith with multiple companies. And I would tend to believe that between safety and return, there has to be a compromise. You know, you're right. Perhaps Infosys will give you the maximum bang for the buck, and you may be well right about it, Nikunj. But I would say, combined with safety and assurance of a management which is doing what it can to get the company up, is a Tech Mahindra on one side. Now, I'm not a gambler in the market. I'm not a speculator. I'm an investor in the market. I also look at safety and say, listen, where are my bets lying at this point of time? You may be right that, it may give a 30-40% pop because going cheap, one quarter result may be extremely good. But the point is, why did the stock trade back from 2,800, 2,100? What happened in this company? What was the press conferences given pre the run-up from 2,100 or 1,800 and thereabouts to 2,800, and what are the press conferences and releases from the company which came at 2,800? Just sit down. I'll send you sometimes the analysis we've done of the press releases of Infosys over the last 8 quarters, and you will find it in any other country in the world. Somebody would have answered a lot saying, is that what happens every quarter to quarter? You guys don't know what's happening, or what is this going about? So question is simple. It's not only returns. It's about safety. It's about investment with the right people. I'm happy with a 30% in Tech Mahindra versus a 40% in Infosys. Believe me, I'm much happier there.
I wonder what's the deal with MCX. I mean, it's a great company, great franchise, market leader in the commodity market, but you don't know who the next owner is going to be. I mean, buying MCX is almost like buying a lottery ticket.
No, I don't agree with that because, one, MCX has come under so much regulatory focus that whoever is the new owner will have to pass a very serious fitness test to become the owner of MCX. That's one. Number two, we all could have maybe have a situation where nobody has a seriously majority to the point of time where the company could get into a problem again like it had. Actually, MCX never got into a problem, let's be honest. MCX is a clean company, has remained a clean company, has settled everything. There has been no problem in MCX. It's the promoter of MCX which got into the problem, and that is what we say, that with the regulatory focus, the new promoter, whoever comes at the end of the day, will have to pass a very serious test of fitness and under regulatory scanner, and therefore the franchise will remain strong and competitive at this point of time. A new owner can only add it, cannot detract from what already is in MCX already. And and let's be honest, it's the largest exchange. It's got a wonderful exchange system. Technology works very well. Brokers are onto it at this point of time. The competitive exchange hasn't got volumes to shift from MCX in spite of all the turmoils. I think it's a great story.
Okay, let's look at Just Dial, and that stock has just gone to cleaners, went to 1700. From 1700, it is now threatening to move from 4-digit to 3-digit. It was a very expensive stock, a cherished stock, more like a cult stock. Markets for the longest time ignored that Just Dial was trading at a P multiple of about 50 plus. Brokerages were running an Excel sheet and basing in that earnings will grow for eternity. Ajay, do you think market men are simply paying price for misperfection? They traders and investors, they priced Just Dial out and it went to a P multiple of 50 times, and now mean reversion is happening.
Well, you are certainly a P man, I can tell you that much. You monitor Ps like hawks of every single stock. I can't believe it. No, you're right. I think the euphoria went overboard, and it was not in India alone. It was also the same happened in the US technology stocks. You saw what happened in Twitter. You saw what happened. So it's not, I think, a purely Indian phenomenon. The only good part or bad part was that it was the only tradable stock in India. So if you have to buy a quote-unquote an e-commerce story, you had to buy this stock. And I think it was, and the trick was, it became very volatile. Nikunj, if you look at the last 2 months history of the stock, it became extremely volatile. 7% down, 10% up. That's a kind of trading pattern it started to show, which gave you a clear warning sign that things are not right. But I think at 900 and 800 and thereabouts. And you remember I told you about the Amitabh Bachchan jinx? It continues. The stock, except you'll tell me Dabur, I'll say, yeah, that's an exception. But that jinx continues. The stock where he comes, do not perform. And I think that's a lesson. You see an Amitabh Bachchan ad, you run away from the stock.
He bought at 100 rupees is what I've been told, and then it went to 1500. So initially if you betted on it, you got
all
it
the
right.
more smarter. No, but you never could get at 100 because we were told that, we were told that it was in lieu of his advertising or whatever that he did for the company. So he got paid for it in a sense of that money. So at the end of the day, that makes it worse. That not only he caused my demise of my money, he made money himself. Now you're making it worse.
So are there any other celebrity endorsements which you track, just like I track PE? Because Shah Rukh Khan has endorsed ICICI Bank in the past, Amitabh Bachchan has endorsed ICICI Bank in the past.
And you know what happened? History tells you, you know what happened, and you know we were short, and you know what happened to ICICI Bank. So I think maybe it's a jinx, maybe I'm imagining things, but I think it happens sometimes.